Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I will be speaking about USDJPY. As usual, I will be first covering the technical aspect of this market. We will then go and see what we have from an order flow perspective. So commitment of traders, which is what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. We have also started the Black Friday month. The link is in the description. It's never been this easy to join the mentorship program. There is a massive discount and you also have the possibility to get a full refund of the mentorship program cost directly in your trading account since we have partnered with the forex broker Blueberry Markets. The link is in the description. I really suggest that you go and check it out. So let's start here the analysis. Now, starting from the monthly, what do we have? Now, here on the monthly, we have a strong impulse to the upside. Now, in general, after an impulse, what you want to see is the market provide a correction before then getting more continuation to the upside. So from a monthly perspective, what we can expect is short-term bearish price action before then longer-term continuation to the upside. But anyway, we don't know if the market is ready for the correction from here because at the moment we still get quite strong bullish in momentum. Dropping down on the weekly time frame, what do we have? Now here in the weekly we can see the strong impulse, correction, and it seems like the market has now started the continuation to the upside. Now in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And in this case, what we can notice is that the market has failed to reach the 0.32 of the Fibonacci taken on this weekly impulse. So even though everything at the moment seems quite bullish, we still need to be a little bit extra careful because it might be that this move to the upside is just a fake move and a bull trap in order to then create the deeper correction, stop out everybody that had their stop losses below the low, and then actually start the move to the upside. So we have to be extra careful with this weekly time frame here for USDJPY. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. Dropping down on the daily time frame, what do we have? Now, here in the daily, we had a market which clearly had created this overextended M pattern. When the market was around this area, I made a full breakdown explaining all the reasons for which we expected this rejection to the upside. That is what the market gave us. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. But now that the market has created the move to the upside that we wanted to see, what is this structure looking like here on the daily time frame? Now, what we can clearly see is that this area was very strong previous daily support here, again, and again here. The market broke it to the downside, creating a fake breakout. We have now broken back above that zone. And what we can expect is for the market to go and retest this previous support, which is now again support here, before then creating a continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have 0.32 and 50% Fibonacci retracements currently lining up exactly at this area that we can expect the market to test in order to create this inverted head and shoulders before then printing more continuation to the upside. So this zone here is a very interesting area for USDJPY, inside of which we could be looking for the potential continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the biggest speculators, so basically the non-commercial hedge funds, the big traders, etc., are doing in the market, what we can see if we check the data for the JPY is that at the moment we are sitting with a massively negative net positioning, minus 107.6k net positions, with 127.9k shorts and only 20.3k longs. So a massive amount of shorts compared to longs. So the JPY is getting very weak, which means that USDJPY could easily provide more continuation to the upside if we actually manage to retrace to this very strong support and demand area. So the way in which we will be approaching this specific situation with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, if the market will go and retrace inside of this area, what we will be doing with students inside of here is monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding USDJPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.